Hey everyone, welcome to my YouTube channel. Good morning, good afternoon, good evening, depending on when you're watching this and where you are in the world. I welcome you to my channel. I created this channel to share information with you guys on ways I'm generating streams of income. So if that's interesting to you, please consider subscribing, liking, and sharing the videos that you watch here so that other people can see it. When we get to 2,000 subscribers, again, I mention it in every video, but we're going to have a crypto giveaway. So consider subscribing and following, clicking the little bell so you'll get the email alert saying that I put out the video for the giveaway and you won't miss it. In addition to that, depending on how much time you have and you don't have time to watch the whole video, or if you're only interested in one of the specifics that I talk about, look in the video description. There'll be timestamps where you could jump ahead, jump back, and review specific topics of interest that you might have. I have an income disclaimer in the video description, basically telling you that I'm not a financial advisor. I'm just a guy on YouTube sharing my knowledge and my information with you. Please do your own research, consult a financial advisor if you believe you need one, and just be safe and be smart about how you do things online. In addition to that, I noticed a bunch of people commenting, which is great. I went through some of the comments and I got a list of things that you guys want to see. So I'll be sharing that with you right after this video description information. Other opportunities are listed in the video description in case you want to get interested in something else that I'm doing. You can take a look at those links, and there's other videos on my channel. For example, tomorrow I'm going to hit the 100 a day profit in this opportunity. So I'm going to be doing a milestone video tomorrow showing that that I'm creating $100 a day in profits in this one. And then finally, there's other videos related to technical analysis. So you could see here some software that I have that I use for trading, and other videos that I have on my channel that you could take a look at. I list a couple in the video description, but if you just go to my channel and just click videos, you can see the list of videos that I put out, and maybe something else is interesting to you. So please consider subscribing, liking, sharing, and clicking the little bell so you get an alert. And now we'll go over the list. So I went back in the comments, and again, it's obvious that you guys like cryptocurrencies. So I made a list of all the different requests that I saw in the video description, and 1 inch, Storm are 2 of the 4 that I have in this set of cryptos. So today I'm gonna do a video on 1 inch and Storm. So again, depending on what you're interested in, jump ahead in the video descriptions by looking in the video details. And you'll see here, for example, I'll show you. You can see here, hit the show more, and then you got a list. So depending on what your interest is, maybe this one won't be so detailed that I'm doing right now, but you might, want to just jump ahead to StormX or 1 inch and not look at the other 2 cryptos I'm going to talk about. And you can find the timestamps in the video description to do that. So just click on that little blue area, and it'll jump you right to that area of the video. All right, so let's get into the cryptos. Again, I'm doing this one because it takes care of 2 of the requests that I got. I got a request for UNI, I believe. Not UNI, StormX. And someone else mentioned something about UNI, so I'm doing this one first, so that 2 of you guys get what you're looking for. And it's time to update these. It's been a while since we did this one, so let's take a look at it. Let's start with, so it's going to be Decentraland, UniSwap, Litecoin, and StormX. So let's go to Decentraland and see where we are. Alright, so I believe when we made the last video, we were looking for a breakout and a check. And I mentioned that we were currently in a DCA area. Now this one ended up retreating down a little bit lower, but it still stayed within the channel, which depending on how you did your trade, you should have been waiting for the breakout. And the breakout happened exactly in the 0.5 to 0.65 range, so that would have been an ideal time to get involved with a trade. Now, one thing I want to see here, you can't see it on the 1 hour, so sometimes you got to drop down lower. So there really wasn't a check of the support line here. So normally we wait for that. I mean, you still have a chance that it still could come back down, but you are in the DCA area, so you could take the trade based on the Fibonacci retracements and the fact that between 0.5 and 0.65 is a good area to start building a position. So maybe don't go all in on your position that you want, but maybe buy 25%, see where it is, and if it's really continuing to push away, then at least you're in a little bit. You don't there still is a chance it could come down and check this line again, because it hasn't done so yet. So there seems to be some positive momentum in the charts today for crypto, but just be careful. Again, you normally want to wait for the check of this line, and depending on how fast down it comes, it's going to still be within this DCA area, so you don't have to rush it. And again, these targets are still in play. You got the green zone, which is the prior peak, which is always important. You want to take some off the table because sometimes there could be a rejection there, and you want to move your stop loss up so that once you get in this area, if price turns and comes back down for whatever reason, it becomes a double top. You will lock in the difference between of when you got in and your stop loss of profits, and it'll be a winning trade for you. So that's really all I gotta say about Decentraland. Let's move into UniSwap. Alright, so we had a triangle here, and we were anticipating the path of price movement, but let me get rid of this. It actually did exactly that, but it didn't go up. It continued going down. So this is no longer in play. What you will see, though, is, like I mentioned in just the last chart just a few minutes ago, we had the breakout. We had a check, so you could have gotten into a trade here, and I always suggest you moving your stop loss up. See, look what happened almost exactly. There was a double top. So it hit the prior peak on A, and then there was a lot of downward momentum. So if you would have moved your stop loss higher as it approached this A or taken some off the table, you would have locked yourself into some profits. Now it's negative, and if you had your stop loss here, then you got stopped out. But ideally, as this pushed away here, you moved this up, and you at least moved it to break even, so you didn't lose anything on the trade. And if you were smart of how you got in the trade, dollar cost average in, you dollar cost average out, you should have considered taking some profits at the peak of A here. So somewhere in this green range, you should have had a chance to take something off the table and move your stop loss up at the same time. And then you would have minimized your losses because you would have had your stop loss at least at break even, if not higher. Once maybe once it broke this impulsive move, maybe you would have moved it up here, and you would have had a winning trade. So now, basically, this pattern is not going to play out to completion. It did hit the first milestone that we were talking about, so let's just get rid of all this. And right now, let's see where we are. Alright, so it's a pretty big zone. We could kind of see another triangle forming right in the support range here, which is kind of nice because if it breaks out, that means you're going to have momentum. Let's put it here, down to here, up to here, and right now it's there. It's probably more of an ascending triangle like that. So two things are happening here. You're in a support resistance zone. So when this breaks out, there's a good chance that it might come back up to this peak here. So let's just take a measured move from the A point to the B point and put this line somewhere around the breakout, and look at that. It's almost exactly to the target up here again. So this right now is a double top, and it's also an M, right? Oh, multiple M's. Downward sloping M right here, but then it faked out again, and it became a double top. double top is usually you take the breakout below here. So let's just see. Yeah, so I mean the breakout down, you would have hit your target on this double top. You know, this right here, this is a double top. This one and this one. It's also an M, usually. We call it an M. Now, the only difference here is it's not tilted downward. It's kind of flat. So what you normally do is you take, for the negative side trade, you take the break of this neckline. Actually, it would probably be, I didn't draw that too well, but it would probably be closer down here, down to this point. And you would take the trade here once it breaks down, and then you would measure from the peak of this down to this, and you would take that and you would place it on the neckline of the breakout. And and again, I didn't draw this perfectly, but you see here it pushed down pretty hard, and if you were smart, you were taking some profits. And you got to look left. You got to look left. And when you look left, you could see that it was three wicks right at this level. So you got some resistance there, then you got support, break through a little bit, up, down, break, and then resistance. So this is a pretty substantial line. So on the downside, again, we didn't watch this in time to catch this stuff, but in hindsight, you would have seen that this might have been an area that you might want to have taken some profits, because you saw that, it was support again, then it was resistance on the downside a little bit, resistance on the upside a little bit, resistance on the upside. So this could have been a spot where you would have gotten in up here and you would have gotten out of some of your stuff here, and then as the price moved down, you would have moved your stop loss into profit so that you wouldn't lose the trade. And again, the double top pattern is done. It's completed. It's over. So now what we're looking at is this ascending wedge inside a resistance area. So once that breaks out of that resistance area, all these wicks and all this, it's gonna shoot back up. And we took the measured move from A to B, which is this one, and you place it on the point of breakout, and it's going to send us back to this double top. So just like before, we got to consider taking some profits, or maybe all profits there. There's another, little mini range right here. We could see there was some wicks and resistance. So in fact, you might want to consider taking some profits here as well. So scale out of your position, wait for the breakout, wait for the check, scale out of your position at these prior resistance levels, because price is going to fight to get through them, and there's no telling that it will. It could break out, come back and check, and then push to this level, but because there's so much resistance, it might just turn around and fall. So if you bring your stop loss to break even, then as you're approaching up, as price action's going up, it's not going up in a straight line like this. It's going up like this, like this, like this, And along the way, you can move your stop losses up below the pivots. Every time it goes up and comes down. So for example, this isn't a trade, but this is just an example of how you would move your stop loss. As price action comes up here and then comes back down and then comes back up here and moves back up, this pivot, when it moves off of a retrace and starts moving back higher, this is a perfect area for your stop loss to be put. So that's just an example of how you would use these pivots to move the stop loss higher and higher along the way. Again, I'm not talking about that being a trade. I'm just showing you this as an example of how you move your stop loss higher as price action retraces and pivots. You move your stop loss right underneath those pivots. The first move you want to do with your stop loss is get it to break even. Wherever you entered the trade and it checked, once it moves away from that, you want to move your stop loss as soon as possible to break even, plus a little bit to cover the commissions, so that you have a risk-free trade. It might shoot straight up, you can leave it breathe, and it might shoot down. And then when you see major pivots along the way, that's a signal for you to move your stop loss higher during the price action movement. All right, so anyway, we're waiting for the breakout. Wait for volume. Wait for the check. Get in. Move your stop loss to break even as soon as you can. As soon as you see a nice pivot over here, certainly move your stop loss up and lock in some guaranteed profits. And then whatever they may be, you know, you can't lose by winning. You can't lose by selling. You can't lose by closing your trades. So don't be greedy. Be smart. Manage your money correctly and continue to chip away at building your account by compounding. Every trade you make profits, the next trade you make, you can use those profits to even make more money. So again, it just goes back to the compounding effect. All right, next one. Litecoin. Yeah, Litecoin is actually breaking out of this triangle. I saw this earlier. So we were waiting on this triangle. So this is not happening, so we can get rid of this. The breakout already happened upward. So now we could drive in here and see what we have here. Let me get rid of some of this so we could just see what price action is currently doing. Alright, so this is kind of nice. This is really nice, actually. So broke out, it tested. So this is a confirmation that it was okay. So this is where you would have, as the price started pushing away from this level, this is where you would have entered a trade. Now, granted, it's come back down, but look, it exactly touched our green zone again. So if you were smart, you probably had a sell trade for a portion of your entry up here. And, you know, either you could have kept it at break even, and you probably would have got stopped out. Or if you would have moved it over here, again, this is that pivot that I'm telling you about. So once it goes up and came back down and moved back up, you could have moved your stop loss here. So at this point, if you would have entered down here and you would have had your stop loss up here, you would have sold out up here a little bit, and you would have moved your stop loss here. Now, no matter what happened with price, if it came back down, you made that difference, whatever from here to here, whatever money, whatever price increase there was, you guaranteed yourself a winning trade. And yes, now it came back down, and now it actually kind of looks like it's creating another upward ascending triangle. So let's get rid of some of this markup here, and now we could see what the next trade is going to be. So when you zoom into this a little further, you see right now we're creating a upward sloping ascending triangle, right? Something like that. You want to try and get as many crosses of this trend line as possible, as many touches as possible. If you want to go conservative, you go out to the furthest wicks. So that you're basically saying once it passed that final wick area, it's a new, it's broken out. And you do the same thing with the top. Now I'm doing it this time with trend lines, but you can use the triangle tool, and I'll show it to you next. So you can either put it at the body closes there, or if you want to be very conservative and really wait for the breakout, you move it up to the most extreme wicks where you have a couple touches. And now that's the breakout area you're waiting for. Now you do the same thing with the triangle tool. So you come here, you start clicking on some of these wicks, and it creates the same pattern. Now it's you have to tweak it a little bit. If you want to have it flat on top here, you just got to move this around, and play with it a little bit to get it to be flat. Again, like I mentioned, if you want to really play conservative, you really want to, that's why it's not happening. I don't have the tool on. So that's how you get the triangle in there, or you could just use the trend lines. Since we have the triangle, let's get rid of the trend lines to keep it nice and clean. So what we're doing here is we're waiting for this breakout to happen. So this is on the 1 hour chart. Now the only caution I have here is it's a little bit of a left shoulder, head, and right shoulder happening here. If we have the breakout, that'll be great. That'll be up. But if it doesn't and it ends up coming back down here, if it ends up coming back down here somewhere by this neckline, it could be, this triangle could, you have a higher probability of this ascending wedge to break up, but it could also break down. So you can see here, once it breaks down, if it breaks up, that's great. It can go up and then do its check and go up, but it could also break down where it comes back and checks and goes down. Now, depending on where this price action goes, either up or down, depending on where it is, if it breaks down, you have to remember that there's a lot of support here. So if you get into an entry here, you might want to consider selling some here, and then again at the B level. These are all levels on the downside. If the breakout happens, that you want to make sure you check out. Then, if you want to do the measured move of the head and shoulder, head and shoulder, this one is a downward breakout if it happens. You would take it from the head down to where the shoulder is, the neckline, and you would put that at the point of breakout. Then you could see that it's coming back into the pattern. So again, on the downside, these are the levels I would consider. I would consider certainly taking something here. I would consider certainly taking something at the B. Move your stop loss down along the way, and then after that, you're gonna have to play it by ear, but you might get some resistance depending on where price action is. You're gonna get some resistance at this trend line. So depending on where it hits this trend line, you might want to consider taking something off the table as it approaches the trend line. So the further it goes, price action on the downside could look, something like comes up, it checks, and then it goes up and down, along the way. And it might take time to come down here, but once it comes here, this could be a support level where it might bounce back up off of here. So you got 3 levels of possible trade sales on the downside. You got one there, you got one there, and you got one here. So be smart. on the upside, what do we have? So we have, let's put in the price target based on the pattern from A to B. Put that over here, and you pretty much see that it's going to be the top of this. So be smart. Take profits at this peak. Right here, maybe even a little bit below to be a little bit conservative. There's a green zone up here that's going to be resistance. There's another, the target is right next to that, so don't get greedy. Also see a little bit of a support structure, things happening around here, so you might want to get out of a trade a little bit here, take a little profit here, take the rest of your profit here, and then come back and take a look at what this looks like. So you got a couple ideas here on the upside and downside. Just use the proper risk management, as I always talk to you about. As price starts moving away, move your stop loss to break even, move your stop loss below the next pivots, and start locking in some partial profits. That's how you become a successful trader. By being smart and not being greedy. Alright, so that's it for Litecoin. Let's see what's next. StormX. Alright, StormX. Where are we? Alright, we're on the 4 hour. For sure we could see that we should bring this down further. It did bounce out. It broke out, actually. So let's just bring this down here to see where the point out breakout was. We could drop down to the 1 hour. All right, so again here, unfortunately, it came out and came back in. Now again, it could be because this wick was higher that we didn't have this drawn exactly right. You know, if you come out to that peak and you draw it that way, you know, there was no fake outs. So again, kind of like I just mentioned in the last chart, if you really want to be conservative, you go to the outermost wicks, and then if it's really going to break out, it's going to go past those two extremes, and you won't get into a trade until after that. Now here's the next question. Let's drop down lower. Did it check? It really didn't come back down and check this line. So again, doesn't always happen that way, but that's the most conservative way to get involved into a trade. You wait for the check. And again, here you see it didn't go out and come back in. Kind of just went out and started consolidating, and then broke up a little bit. Now it's consolidating, and that's pretty much it. So what you should be looking for now in terms of your target, this is on the 15-minute. We can go back up to the 1 minute, the 1 hour to clean it up a little bit. Now, if you got in down here, you could see there's congestion here. You know, this is a DCA area. But there is congestion. Let's get rid of some of these fibs. Make it simple. All right, so you know, you can see here, up here, there's a lot of resistance areas. See how it came up, tried to go past, came back down, tried up, came back down, came up, kind of wicked a little bit, then it got the momentum to push through, then came back and actually checked, and it supported it, and then it went higher, and then it came back down, and it got a little wick there, but it was support. Then it broke through, and it kind of teeter-tottered back and forth around it. Then it finally broke down, came back, hit it again, came back down. So you can see there's a bunch of touch points. The more the touch points, you know, the more resistance in the past. You know, all these points are gonna basically tell you that when this price action goes higher, you're gonna see the same kind of thing up here. So if you're in a trade, consider taking some profits here. If you're in a trade, take some profits over here. And then finally up here. Move your stop loss up. So if you took this trade, you would have got in somewhere over here possibly. Unfortunately, it didn't check back, but when you start seeing support outside this channel, this could have been a good indicator for you to take a trade. So you could have put your stop loss there. Right now, if you're in the trade, you should be putting your stop loss. Get rid of this again. You should be putting your stop loss over here. So now, you know, this is like a little mini triangle. So if that breaks up, this is a possible, you take maybe 25% off the table. Up here, when it's here, you take another 25%. So when it breaks through here, you'll probably see something along this line and bounce back up here again. You move your stop loss here. Once it hits this area, you take another 25% off. Then it comes up, maybe it checks, maybe it's going to bounce between these two a little bit, you know, and you find, you know, maybe 25% off here, the table. So now you only got 25% left. Your stop loss is here, and now you gotta wait. You gotta wait to see if it's actually going to break through and go higher. If it goes higher, these are areas of interest in the past. You know, just continue doing the same thing. So you got 25% left, and you got to decide how much higher you want to go. But as you move your stop losses higher and higher, no matter what happens with this last 25%, wherever your stop loss is, you're going to end up locking in. For example, if you leave your stop loss underneath this area, right? Oh, that's not what I wanted. If you move your stop loss, what's going on here? If you put your stop loss here, then no matter what happens with the rest of your trade, you know, it can go up, and maybe you don't take it, and it comes crashing down. You know what happens? You get out right there. You know what that means? From here all the way down to your entry, which was here, you locked in money. It was a winning trade. You made some money here, you made some money here, you made some money here, you left the last 25% for risk. It didn't hit your mark or whatever you might have had up here. It turned around and went south. But you know what? You had your stop loss set up here. So you guaranteed yourself this for your last 25% of your position. That's how you should approach all your trades. You can dollar cost average into a trade, and you dollar cost average out. First average out, second average out, third average out, and then you let the rest run, and then this was the final average out. So you had partial profits along the way, and then you had your final profit here. And then you could figure out what the overall trade profit was for yourself. Alright, so that's it for the charts. So I hope you enjoyed the update. I hope you're practicing this on your own charts. That's the whole purpose of this, to get used to finding patterns that are on the chart and waiting for the breakouts. And even if you do it on paper and you do fake trading, just write it down. Say that I took a trade at this day, this time, or mark it up on the chart that you took the trade here and you anticipate it to go one way or the other. Did it do it? And if it didn't, see if you were right, if you had your pattern drawn right. If some news came out, do the after effect lessons learned approach to each of these trades, and you find out if you went wrong or something else was external and you couldn't help and couldn't do anything about it. Don't feel bad about it. But as long as you're sticking to your trading plan, you're sticking to your risk management, you're not over leveraging your account, you're not getting emotional, you're not getting greedy, you're not getting stressed. Those are all the things you have to do as a trader. You have to just keep a level mind, realize that if the trade's not right, don't take it. Lock in your profits. Even if you didn't make a home run, you made enough to come back with those profits for the next trade. And you start seeing the compounding effect, because now when you grow your account from 1,000 to 2,000, now the percent you put into your next trade could be double what it was when it was 1,000. Now you're making double the profits. And then you can just keep doing that over and over. Rinse and repeat. Do it methodical, do it mechanical, do it without emotions, and you'll do okay. So take care. I look forward to having you as a subscriber. Please consider subscribing to the channel, clicking the little bell. You get notified when I put out a new video. When we hit 2,000 subscribers, we're going to be doing a giveaway. So stay tuned, and I will be doing another video. I was wrong, actually, in this video. I said it was a 1 inch, and it wasn't. So let me take that off. It was UniSwap. UniSwap was another one that a member of our group or our channel wanted. So those two are done. I'll do another video for 1 inch. I'll make a new set of charts for these three, because I don't think I have these at all, even in my charts on TradingView setup. So I'll set these three up, and I'll do whatever I don't know what other ones. Oh, OMG is part of this. So OMG is going to be part of the the analysis when I do this one. And I could probably add 2 of these to that, because there's only 2 charts on there. So I'll make the next chart that I do. That'll be the next one I do right here. So I'll take care of four coins, and then we'll have to figure out when I do this one. And then we'll cycle back and look at the other ones that we've done already. So, like I said, consider subscribing, clicking the little bell, liking the channel, and share this on social media so we can grow the subscriber growth and get it to 2,000 so I can do the giveaway. And have a great day. Talk to you guys soon.